The 10 commandments of smart investing / trading in Tesla is a focus of our show today, because we want you to make $1 million this year, and these techniques will help you get there. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. I want to also thank our Patreon supporters. Your support is greatly appreciated. And we also want to encourage you to take time to like and subscribe if you enjoy the show. So what we're focused on today is that we had a couple of our top traders in our trading group that enjoyed terrific money made on the Bitcoin activities on Monday or into Tuesday, and then proceeded to lose all of those gains in the remainder of the week. And after listening to what was going on, I was surprised at some of the techniques being used that violated a number of the commandments of trading Tesla in particular. So basically, they made money elsewhere on Bitcoin-related entities, including MicroStrategy, and then they sort of switched from there. And the question is sort of, how do you manage yourself well relative to Tesla? Because so many people have made great money on it. They're trying to maintain that Tesla streak or be loyal to it, if you will, over time. So I initially thought about the 5 trading commandments of Tesla, but then I sort of was thinking the 10 commandments is available. I mean, it could be 20 or 30. There are a lot of numbers. I wanted to note that this show really requires you to think and consider a lot of issues. A couple of background books for this conversation will be Peter Lynch's One Up on Wall Street, as well as Taleb's book called The Black Swan. So this book is a little bit more, this show is a little bit more intensive than we usually do, but the goal is to sort of arm you with tools to allow you to be successful in your investing / trading on Tesla in the coming period based on lessons we've learned in the past. I also wanted to note that we have a number of shows on investing and trading in Tesla underneath our options trading playlist. So I can't do a show that encompasses everything. I noticed there are a lot of questions that pop up where there are people that want me to stop and break down a very large amount of information, and I can't, only because it would take forever to do so. We've actually done a number of shows on them, so we invite you to take a look in that area. We also do some trade consulting where we one-on-one help folks to understand better trading as well as investing and trading in Tesla. And we do that on a consulting basis. You can hit us up on Facebook at Teslafaninsight, and we can respond, leave a phone number and an email so we can respond there. And then we also wanted to note that we have a daily Patreon facility where we provide insight on what we see happening both with Tesla and other companies that might be worth your investing or trading ideas. So the first thing that I popped to mind, and we're not necessarily doing this in an order, is beware of Friday pins. So we've developed a concept called pinning, where what happens is the market makers will figure out, market makers being big companies like a Goldman Sachs, for example, JP Morgan, all these traders have all kinds of money, and they have excellently trained people on how to relieve small-time investors of all their money. And we want that not to be the case, hence this show. So one of the things that we've noticed is that if you go back over the last year, the S&P sort of changed that, but in essence, every Friday is an expiration date. So typically the market makers want to pull the stock price down below 50 or below, let's say 700, 800, whatever the zeros might be. And the objective there is that they've written a lot of call options, and for the people who are below, all the people that were above that number lose their money, and the market makers make money on those. There are certain circumstances where there are actually more puts than calls. And in the case of those situations, the market maker might push the stock price up just enough so all the calls expire worthless. So one of the recommendations from a commandment standpoint is, unless you're prepared to manage how market makers can handle you on that Friday, it might be a good idea to lighten up your trading position until the very end of the day, and then you can buy, be it stock or options on that Friday, and anticipate a nice bump in the value of the stock on Monday and Tuesday. So has this happened before? I would say, based on what I've watched, prior to, let's say, S&P entry, about 70% of the time, between 70 and 80% of the time, this trade was in place and you could easily do it. Since S&P entry, things have changed a little bit. The first couple of weeks, the S&P folks, there were too many of them, and they sort of wiped out the pin. The stock rose nicely and was not impacted by the pin. And then we got into this week, and it was explained that basically the pin occurred, but in a very strange way. The stock dropped below 800 and then finished up at 815. I think that if you're on that trade, you definitely made money because it dropped below 800 by $8 and then rose, but you definitely could have sold out your puts at a nice profit in the process. So the first item is beware of Fridays, because that's a very tough day to trade, because you have some very large, moneyed, and experienced folks who are trying to wipe you out. And I think it's a tough day to do it. But if you play it right, you can also make some good money, anticipating a nice bounce on Monday and Tuesdays, which is, a bounce that's been out there about 80 to 90% of the cases for Tesla over the last year. So a couple of data points to be noting of. The second point is, when big dogs tell you the direction, believe them. So Tesla stock price could rise, it could fall, and that's the same for any stock. One of the biggest challenges out there is, can you make money by taking the opposite position to where most of the big traders are going? So I bring up this question in application for this week because if you watch what happened to Tesla's stock price, it actually rose with the news that Tesla was getting into Bitcoin on Monday initially. And then all of a sudden, we had this downdraft in price. Now, it was asked by one of our Patreon supporters, well, if it looked pretty positive after the news was announced and the stock price bounced up, call it 15 or 20 points, why would the opinion change dramatically? Excellent question. And this brings up something we call the 3-day rule. The challenge is that once news is announced, the tendency is for there to be a reaction by the hedge funds, even the bots. So there'll be literally, if you have a motion of a stock going in a direction, the bots are taught to quickly buy or sell, and then buy into that momentum and then sell in order to make sure they preserve the profits almost automatically. So you can't necessarily rely on that sort of first mover, first activity that you see. So we came up with an idea called the 3-day rule, and the reason for that is that it gave an opportunity for the large institutional managers to have their analysts in-house and paid analysts review new developments for that company and determine, hey, is this a good thing for us? Should we get in? Should we get out? You'll notice on the 3-day rule particularly, but starting the day or so before, there started to be this, we like this Bitcoin move by Elon, but then everyone started looking at the accounting implications of the Bitcoin purchase and saying, I don't think this is a good idea. And so that's why you saw the stock price sort of drop into the 850 range. And then once all of the analysts had a chance to explain what their thoughts were on this, a lot of the institutions said, hey, this is a good time to get out. That's why we saw a 40-point drop in the stock price of Tesla. So you have to be mindful of the 3-day rule and how it might work, because any new big piece of information, it could be earnings, it could be Elon make a comment, it could be literally an announcement of a number that's impactful, or even a new product, i.e. this week he talked about the Cybertruck being introduced. All those variables can impact things. So you have to be mindful of the direction and what the large market makers are doing, and whether or not you're riding for 6 months or a year out, or if you're trading or investing for a short term, be it a day, a week, a month, you definitely have to be mindful of what the movement is currently in that regard. The next number 3 for us is Monday and Tuesdays generally are winners. If you develop a relationship with a stock, the tendency is that you sort of, over time, you get a feel for, kind of who are the companies, what do they tend to do, what are their tendencies, and can you manage those tendencies efficiently to be successful? So one of the things for Tesla is if you go back over the last year, Mondays and Tuesdays tend to be pretty good at a clip of like 85% plus. Have there been down days for those days? Absolutely, particularly if the market has been going south. But in general, those 2 days for Tesla have been very strong, particularly Monday and into Tuesday. And so carrying trades into Tuesday could be a good deal, but further into the week could be painful as the market makers start to engage in the manipulation of stock prices that we've talked about before. The next, number 4 that we want to look at is, there's a book called Who Moved My Cheese? And the core idea of the book is you have these mice and you put food in a certain spot, and you have the attempt by the mice to keep going back to the same spot even when the food is no longer there. So I call this the Who Moved My Cheese phenomenon, because now that we have the S&P and what's going on with Tesla in the Bitcoin space lurking as impactors on the stock price of Tesla, there's all kinds of new ways in which those entities are impacting the stock price. So one of the challenges in trading, investing Tesla is you could be mentally thinking correctly that Tesla has tended to do these things, be it on Fridays or Mondays, etc. I think that data is still flowing well. But in general, there are a lot of people saying, hey, I'm loyal to Tesla. I like the car. I want to get back in right now. And in the past, we've tended to have these things occur. And so the challenge, though, right now is there's this Who Moved My Cheese phenomenon, which is, wait a second, where the money was previously is no longer there. And if you go back to look for it, it could be very painful, because where the money is probably in a different spot, impacted by a number of variables, and you have to be flexible enough to move on to that, including possibly just going to cash and sitting there and watching what happens until you have a good command of what's occurring so you can get back in. Because as you've seen with Tesla's stock price movement, it can be dramatic and very expensive from the option standpoint, even if the number of shares or dollars lost on a trade aren't that great. Number 5 is what I call Elon surprises happen. So if you go, I had probably one of the strangest experiences of my life. One of our investor traders, I call him John, he lives in Southern California, and I were having a conversation last weekend, and I said to him, I think there's a problem right now with Elon. And he was like, what's that? And I said, if you spent 4.5 years studying him carefully, Elon has what I call the boredom factor. He's a really smart guy. And when he gets bored, something interesting happens. It could be a positive for stock or negative. It's unknown what's going to happen, but we just see him do something that we didn't expect. So over the weekend, this past weekend, I articulated that I think it's time for Tesla/Elon to do something that we didn't expect. And it's going to be very impactful to the stock. So you want to be aware of that in your trading process currently. But now that Elon has done this and his hand has been slapped a little bit and there are all these changes occurring, I would say that he tends to do or say these things on about a 90-day increment. So the next time this occurs is, as you can imagine, about 90 days from now is what we're expecting. It could be slightly less or slightly more, but the impact tends to be large. And it seems to occur because all the operations are flowing nicely. And Elon really likes firefighting. The challenges of figuring out new problems and how to position the company, et cetera, to address those issues is one of his favorite activities. And without that occurring, I think he gets into somewhat of a boredom mode. I'm trying to keep an eye on my notes here because I want to make sure our points made don't deviate greatly from what we've talked about. So I would say Elon's surprise is very much a norm, and we look forward to you not being surprised anymore. The next one I have is arguing with big dog traders bad for portfolio health. So there have been occasions where we've seen situations where the very large traders will run away from Tesla and then come back once the dust is cleared. So an example being, what tends to happen is if there's a severe market pullback, what the entities are taught is that the bots will actually do very quick sales to optimize not losing money. So there's a lot of people currently talking about the market potentially crashing. What tends to happen is that there's a concept called flight to safety. So what you'll notice is that, for example, drug companies, utilities tend to have very consistent earnings and profits. Well, what a lot of people will do is if the market starts to crash, they'll quickly sell out of high growth technology and stocks like Tesla and move over to these other entities. So you obviously have to maintain your resolve. If you're operating on a 6-month, year time frame, you can easily weather this. But it is good to be mindful of, what are the big companies, the big traders, the big investors doing, and how do you position your portfolio relative to that? And this is why we came up with the whole 3-day rule. The next one we have is something I call cheating on Tesla is a wise plan. All growth companies have a growth plan that ebbs and flows. So I've been impressed because there's a lot of folks like yourself, like me, that love to see what Tesla's doing, have invested in it, and have done well over the past year, understanding the options and the stock as well as the growth of the company, all three facets, to really do a good job making money. The challenge, though, is that every company, even Tesla, goes through, if you will, a growth pattern, where as the company gets bigger, things like efficiency of analysts. So there's a guy named Ken Fisher at Fisher Investments, who I work with briefly. And one of the things Ken taught us was that as a company grows from very small to very large, you can watch the number of analysts that cover that company keep increasing. And so the fewer analysts you have covering a company, the higher the chance that you could see exceptional growth that was unexpected. The larger the company becomes and the larger the number of analysts that cover it, the better the chance that they have the resources and methods to figure out everything that this company and stock is going to do. It makes it more difficult to sort of beat the street or anticipate where things are going because it's being so intensely covered. So Tesla is somewhat in that zone where it's, it's well known, and it's harder now to find the, oops, we didn't anticipate this elements of why Tesla does something amazing that affects rapid growth in a short period of time. Now, exceptions to this clearly happen around earnings typically, because when those numbers come out, Elon's still hiding a lot of things like the backlog, et cetera. So we do see some things happening in the, wow, nobody expected this, and even the analysts that are being paid a lot of money can do this. When I say cheating on Tesla, I mean you may not choose to invest elsewhere, but it's not a bad idea to be mindful of other entities or themes that represent excellent places to invest that a lot of people hadn't thought about that you may already be involved in. Obviously, the folks there in Bitcoin did well in that regard. But for example, right now, there's an interesting trade going on with Shopify. They announced earnings this week. They're really giving Amazon a run for their money. And so understanding trading an option stock like Shopify might not be a bad idea. If you want less heart palpitations, I would say, companies like Amazon, very painful on the heart. Apple, a lot, it's a huge company, it doesn't tend to slow, are something to consider. The next on our list is something called using your command of Tesla to actually make money. So TSMC provides the chips that go into Tesla's vehicles, and you notice Tesla isn't having shortages, so their management of that aspect of the company is superior to some of the big OEMs who are not in Silicon Valley, near all the designers and producers of chips. Another example of how your command of Tesla will impact your ability to invest in this way is something we talked about before, which is cattle. So cattle is the way Tesla is doing its low-cost solution in China. And so by using your command of the growth of Tesla, and particularly the growth of China production, one entity you might want to try to figure out is, can you find a way to invest in CATL, which is on the Shenzhen exchange. Now, there's a sidebar here that I want to note to you, and that is that there are a lot of you that I've met and spoken with that have made a lot of money and have portfolios that are $500,000 and above, $1 million, $2 million, $3 million, those numbers. So as you get larger, it's always wise to split your money between two entities in terms of trading entities. We've seen this with Robinhood and others, where by having all your trading in one location, you're screwed because you don't get the benefit of two locations that might be able to split your trading activity. And so that can big time affect whether or not you can get trades done when you need to, etc. So it's extremely prudent to not concentrate everything in one place and try to break it. I know it's a pain because now you're tracking, okay, what do I have over there? What do I have here? But you can see based on the behavior of Robinhood relative to GameStop that it's actually a wise move to have a secondary entity that you have as a trading platform available to work with. So your knowledge of Tesla allows you to have an anticipatory capability for things like mining companies related to lithium ion or cobalt or any of these, as well as perhaps battery suppliers like an LG that's dominating, like what's happening on the low end of price for Tesla as they work with cattle. So you can use those as ways to identify growing entities that might be worth your time. And I think in the case of cattle, it's going to grow faster than Tesla this year because the Chinese market is huge and to be considered. The final list of our 10 commandments is something called implied volatility nightmares. Bet the rumor, not the news. So one of the most difficult parts of options trading is the fact that if you look back at Tesla, as we get close to earnings, there's a lot of volatility expected. It's happened maybe once or twice. It's like 20% of the volatility moves as predicted with 100-point moves. In most of the cases, the moves that happen with Tesla's earnings or some of the big news activity is muted dramatically. So when you have an option, there are three components of price. There's proximity to price, volatility, and time. So volatility could be implied as implied volatility in terms of, hey, you're paying a lot of money because the stock could move dramatically after earnings or announcement or after some big event that's coming up. Well, what if that doesn't happen? Think about Battery Day this past year, all the anticipated action that was supposed to happen with it, all that money, and nothing happened. Well, this tends to be a very common story for Tesla, and it's a great way to lose a lot of money on options. So it's not a bad idea to consider getting right up to when the news is coming out in terms of your trading and just getting out and trading your way back into it after the news hits and the implied volatility changes dramatically right afterwards, because you can lose a lot of money in that process. So these are 10 commandments, I believe, that will help your investing trading when it comes to Tesla. And I'm open to adding more to the list because one of the great things about this channel is we got a lot of people that have made a lot of money. We also have a lot of smart people here. And if you read the comments, it's usually helpful in terms of expanding your window of knowledge and command of how to invest and trade better. So I believe that Tesla is still obviously a great company. I think that there are too many people who study the company aggressively for surprises to swoop in and big time affect huge growth in stock price that's unanticipated. One of our investor traders suggested that we've sort of moved from Tesla being a great trading stock on options or stock into a zone of more like middle agehood where things tend to happen. There's still growth, there's still long-term growth, and it tends to be a better stock to own as an investment with the stock rather than trading it as an option, because everything is just not delivering returns like it was a year ago to allow you to make money. But at the same time, everybody wants to be loyal in order to support the company and make sure it does well, which I think, are good things, not bad. And so, something to consider. We're in the zone right now that's midpoint between the last earnings announcement and the next one. We're 3 weeks away from knowing what the car counts are. I would love to have those of you who are friends of the show around the world, what are you seeing in the car lots near your house for Tesla? One of the lots that we've showed you probably 100 times is a lot in a place called Tyson's Corner, Virginia. And the idea was to sort of drive through the parking lot and see, well, what cars are on the lot? What's missing? Do you see a lot of trade-ins? What's out there? Because it gives you a feel for what the buying public is doing from different angles. And if we all chip in a look at what we're seeing from our respective parts of the world, I think you might get a better feel for what's happening with the company's success upside of sales or not so on the low side of sales. And this is surprisingly proven to be effective over time. So it'd be fun to hear your local, what's going on there. So we look forward to your trading, investing of Tesla. My take on where we are now with Tesla is that we're really waiting on the next round of earnings, particularly how things are going in China, to keep showing that Tesla is growing nicely. We have Rivian now starting to deliver cars this spring. There's some competition out there to be considered. But I just hope the Cybertruck gets here sooner than later, because we have some nice growth legs of semi and Cybertruck that lurk as ways in which Tesla has very good long-term growth. And in the short term, we do have China starting to really flex its muscles in the growth of the Model Y that's being sold, and having real numbers to go with that right now, I think are going to be very, very helpful. So, at any rate, I just think that we're in a kind of Tesla has established a 20 to 30 point range of trading. It may be lower now. It used to be 840 to 865-ish. Now we're in that, what I think is that 820 to 840 zone, until we have some significant news to impact it. Also wanted to encourage you to check out Squawk Square. He has a Twitter account, and he often describes methods that he's using to trade, a few thousand shares at a time to make money as Tesla moves around. And I would say 60-70% of the time he's right, and it might be a way for you to identify new information with which you can trade. So it's another route you might consider. At any rate, I wanted to switch over to our health tips. Don't forget 25 leg lifts a day to ensure you strengthen your quad muscles. Also wanted to encourage you to consider a 5-2 or other fasting type diet. Also wanted to encourage you to consider 30 SPF or better. Encourage you to try to maintain your sleep schedule on the same time, wake and sleep, for a couple of weeks so you can get into a circadian rhythm that's healthy for you. Also wanted to encourage you to consider a very light, as in a salad, meal prior to lovemaking, because the blood flow to your stomach would be very limited, leaving blood flow to other areas of the body for lovemaking to occur effectively. And so finally, also encourage you to consider no more than once a week for fried foods. It's a great source of type 2 diabetes if you're overdoing it. At any rate, This is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss German, au revoir French, Lehitro, Hebrew, Choda Hafez Farsi, Zdravstvuyte, hello in Russian.